Well, let's start with saying this. Both shares are down in the pre-market on the heels of those earnings reports. So here's the story on Google. The headline earnings per share number, $9.56. Estimates were for $10.80, so a miss there. Revenues after taking out traffic acquisition costs, also a miss for them as well. And if you look at their cost per click, that's where it really comes into play here, because again, with the cost per click, you're talking about a situation where it's down 6% versus down 3%. Now, that average cost per click is what's getting a lot of attention amongst investors. Google is pushing more into mobile ads, and those rates are less than those for ads placed on traditional personal computers. But as we all know, that's an industry where it's headed, at least now. The more and more consumers are using their smartphones and tablets, the more and more these kinds of things matter. And speaking of shifting demand for PCs and mobile devices, software giant Microsoft missed estimates by the widest margin in at least a decade. Earnings per share coming at 66 cents per share, estimates 75 cents per share. One of the big reasons, slowing demand for personal computers that use Windows as their operating system. Microsoft also took a $900 million charge as it wrote down the value of its inventory on Surface tablet computers. Microsoft CEO Steve Ballmer is trying more to focus on services and devices, but those businesses, they carry thinner margins, Trish. So certainly Microsoft and Google, two tech stocks, very much on the move, on the wrong direction, at least today, this morning.
All right, Dom Chu.